Okay, let's see the next adjustment. This is the fourth adjustment we must identify. Look here. Information relating to property, plant and equipment are as follows. Okay, next one. All items of property, plant and equipment are depreciated on straight line method and they were available for use from the date of purchase. Look here, what is the meaning of that? Straight line method. They are available for use from the purchase from the date of purchase. You know what is the commencement date of depreciation should be started. The commencement date of depreciation is available for use date. There is an asset available for use. The available for using. This is the commencement date of depreciation, not the purchasing date. They said that they were available for use from the date of purchase. This meaning was purchasing date and available for using date is same. Why they said that are available for use from the date of purchase. Therefore, we can depreciate at the purchasing date at the available for using date. Again, I said depreciation commencement date is not a purchase date. This is available for using date. Okay, this is a usable condition date. At that time, they said that available for use from the date of purchase means the purchasing date and available for using date is the same. Therefore, we can depreciate at the purchasing date. Okay, let's see. This is the next one. The manufacturing plant was revalued. They already revalued. Okay, past tense. Revalued at its market value of 80,000 is 80 million. Okay, 80 million on 31st March 2025 is a closing date revaluation. Okay, they already done. However, the revaluation surplus shown in the trial balance has been calculated only by considering the difference between the revalued amount and cost of the plant. Therefore, there is a property, plant and equipment related question. Therefore, I immediately prepare a property, plant and equipment note. Therefore, there is actual property, plant and equipment note is the structure in the structure, but for the explanation, I prepared property, plant and equipment note for only one asset. No, look here. This is the PP. Firstly, we identify cost and revalued amount. After that we identified opening balance based on this topic. Okay, opening balance, additions, disposals, cumulated depreciation, transferring. This is the revaluation, surplus or deficit. After that, there is a closing balance. Next one, we started cumulated depreciation. This is a topic. Based on that topic, we identified opening balance. Balance is the annual depreciation. Annual depreciation. After that, we identified disposals. After that, we identified accumulate the transfer of accumulated depreciation. After that, there is a closing balance. No, there is a closing balance. After that, there is a identified closing carrying value. Okay, this is the final one. Okay, next day, firstly we identified there's a manufacturing plant. I write that manufacturing plant. Okay, manufacturing plant. Okay, let's see the question. They said that the manufacturing plant was revalued as at its market value of 80 million on 31st March 2025. They already revalued. However, the revaluation surplus shown in the trial balance, there is a revaluation surplus already calculated, balance has been calculated only by considering difference between revalued amount and cost of the plant. Okay, this plant was acquired 1st April 2024. On this date, the useful lifetime and residual value of manufacturing plant were estimated 10 years and rupees residual value was 7.5 million is 7,500 respectively. What is that? Look here, they already revalued. Revalued. What is the market value? Manufacturing plant was revalued its market value 80,000. Okay, 80,000. 80,000 was revalued amount. Therefore, the revaluation was wrong. Therefore, I prepared another column. This is the wrong. Already done their adjustments. Look here, they already revalued the closing at the closing 80,000. This is 80,000 was closing balance 80,000. This is the wrong, no? We must they already calculated. What is that? We can find these answers, find these amounts in the trial balance. Look here, they already calculated, already revalued. Look here, manufacturing plant, we can get it, revalued amount 80,000. Revalued means at the closing date they already amount accounted. Accounted means they already identify as a closing balance. This is the wrong balance, no? Okay, at that time they said another one. Okay, they said that another information. They said that, okay, closing. However, the revaluation surplus shown in the trial balance. What is that? Revaluation surplus in the trial balance. Look here. Revaluation surplus in the trial balance. What is that? 12,500. Okay, 12,500 already calculated. Okay, 12,500. Okay, however, revaluation surplus shown in the trial balance 12,500 has been calculated only considering difference between revalued amount. Revalued amount, what is that? 80,000 and cost of this plant. There is a gap between 80,000 and 80,000 is revalued amount. Revalued amount means 80,000 and cost of the plant. Okay, next one, this plant was acquired 1st April 2024. Look here, they already calculated revalued amount 80,000. What is the result of revaluation? They already calculated. This is wrong. Revaluation surplus, they identified 12,500. How they calculate this 12,500? Gap between closing revalued amount and cost. What is the cost? Cost means additions. Why? They are acquired in 1st of April 2024. At this time, what is the gap between this value and cost? This is the cost, no? Cost and revalued amount. What is the gap? We can, after the addition of 12,500, what is the answer? 80,000. Okay, 80,000. What is that? Answer is 67,500. Look here, this is the cost of acquisition, 67,500. The gap between revalued amount means revaluation surplus. This is the wrong adjustments they done. Okay, what is the correct adjustment? Look here, correct adjustment at the revaluation, they revalued closing date. At the closing revaluation, closing date revaluation, closing date revaluation, what is the path? What are the steps? Firstly, you must revalue this one at the closing date, no? Firstly, you must be depreciate. Okay, depreciate. Why? At the closing date, no revaluation done in closing date. Before the closing date revaluation, you must be annually depreciated. Firstly, you must calculate annual depreciation. This is the correct path. After that, you must be transfer the annual depreciation and all cumulated depreciation to cost of the asset. Therefore, you must transfer all cumulated depreciation to asset account. After that, you can record revaluation, surplus or deficit. Okay, firstly you must be identify the annual depreciation. Okay, annual depreciation. How can we identify the annual depreciation? You know, this addition is cost 67,500. This is the correct answer. Therefore, correctly I added this one. The revaluation amount is 80,000. This is correct. Okay, this is correct, but this amount was wrong. Before the revaluation, you must be depreciate. What is the I firstly identify this one, no? Cost. You must revalue this asset at the end of the year, no? Therefore, firstly you must be depreciate. What is the depreciation? How can we calculate? At the old value. Why? You cannot depreciate at the new value. Why? The new value was entered to the accounts at the end of the year. Therefore, you must be depreciate all balances. Okay, let's see. You must be identified what are the method of information of depreciation. They said that this plant was acquired 1st of April 2024. This is the opening date acquisition. No? Therefore, we can depreciate all year. Therefore, on this date, this is the acquisition date, useful lifetime and residual value of manufacturing plant was estimated 10 years and 7,500. How can we calculate annual depreciation? Look here, annual depreciation annual depreciation. Cost minus residual value. Residual value divided in useful lifetime. Useful lifetime. Lifetime. What is the cost? Cost is already identified. 67,500. 67,500 divided in 10 years. What is the residual value? Residual value is they supplied. Residual value was 7,500. No, 7,500. What is the answer? 67,500 minus 7,500 is 60,000 divided in 10 was 6,000. 6,000 is annual depreciation. They already accounted this one. Look here. What is the double entry for annual depreciation? What is the double entry? Depreciation expense debit. Depreciation expense debit. Debit. Credit to cumulated depreciation. Cumulated depreciation. Credit. You can see in the trial balance and other expenses these amounts. 6,000 was already calculated. Look here, the question 6,000. First location is what? First location is depreciation expense. Other one is cumulated depreciation. Look here, 6,000. No, 6,000. Look at the trial balance. Trial balance. Look here. Cumulated depreciation manufacturing plant. Look here, 6,000. They already done. And this is the cumulated depreciation now. What is the expense? Expense is there. Look here, 6,000. Depreciation of manufacturing plant 6,000. The depreciation is correct, but they do not include to the revaluation. Therefore, 6,000. What are the locations? We must be at to where there is annual depreciation. No, annual depreciation we must identify. There is a error column. Annual depreciation was 6,000. We must identify. Immediately we must identify in the this is a manufacturing plant. This is related to not a operating expense. This is related to where? This is related to manufacturing cost. Therefore, after that, immediately we can identify this 6,000. This is the cumulated depreciation short. No, this is the cumulated depreciation credit short. What is a debit short? The expense debit. Depreciation expense debit. Expense should be they already identified in the where? Look here, depreciation of manufacturing plant as a operating expense. Therefore, we can eliminate it and we can carry out this amount 6,000 where we must carry out this one where I said in this area there is a total manufacturing cost not included this 6,000. Why? This 6,000 was included in operating expense already. Therefore, this 6,000 is included to this manufacturing account. Okay, this manufacturing cost should be include 6,000 cost. At that time, the manufacturing cost are in, there are two locations. One part, there is 5 parts, no? 1 or 5th are in the costing inventory. The another part is in the cost of sale. Therefore, this 6,000 divided in two allocations. This 6,000 into this 4 parts. 5 into 4 is what is that? 4,800 should be include cost of sale. Why? There is a 5/4 of these cost of sales are included in this one, but one part of this fifth, therefore I include the 6,000 into 1/5 is 1,200 should be included in closing inventory. The 6,000 manufacturing plant depreciation should be included to manufacturing cost, but manufacturing cost we cannot find it. We can find it the branches of manufacturing cost. The cost of sale include the parts, 4 parts of 5 is a total manufacturing cost. Now the 4 parts should be included to cost of sale. One part, that's total is 5 parts. Now one part should be included to closing inventory. Therefore I include this one to our structure, our answer. Okay, therefore I identified this one. Therefore I already identified closing inventory. Closing inventory should be identified. What is the amount closing in the 1,200 must be add to closing inventory. Therefore I add 1,200 to finished goods. Okay, add 1,200 for finished goods. The remaining balance is related to cost of sale. What is the amount related to cost of sale? 4,800. 4,800 should be added to cost of sale. 4,800. What is the meaning? Manufacturing plant depreciation. Okay, let's see. Let's go to the question and let's go to the revaluation. At the revaluation, first one is done, annual depreciation was done. What is that? Look here, annual depreciation was done. Okay, after that we must transfer all cumulated depreciation to asset account. How can we transfer? Look here, all depreciation are this one, not opening balances there, therefore we can transfer all cumulated depreciation. How can we can deduct from this. Transfer to asset account means we must transfer to asset account cumulated depreciation transfer. This is the deduction of this one and deduction of this deduction was done and correct amount. No, this 6,000 was correct amount. This is the wrong. No, therefore transferring is 6,000 there. After that this transferring come to this one, cumulated depreciation transferring 6,000. This is the deduction. These are the deduction. After that we can revalue 80,000. 80,000 is a revalued amount. After that, what is the revaluation surplus or deficit? Look here, 67,500 minus 6,000. What is the answer? 61,500. Convert to the 80,000. What is the gap between 80,000 and 61,500? 18,500 surplus. This is the addition. 18,500 addition. There is a first done revaluation. This is the revaluation gain. Okay, let's see. After that we can finalize this one. The no cumulative depreciation, 80,000 is answer. Okay, revaluation revaluation surplus should be included to where? Other comprehensive income. 80,500. We can go to 80,500 should be included in where? Other comprehensive income. Other comprehensive income. Okay. Let's see. There's other comprehensive income is included in the income statement. Therefore, other comprehensive income, I write revaluation surplus of manufacturing plant 80,500. Sorry, 80,500. 80,500. After that, we must include the actual figures. This is the answers now. Property, plant and equipment. Property, plant and equipment. Notice there, we must identify the shots of property, plant and equipment. First asset is manufacturing plant. Manufacturing plant. We can copy the correct values. Look here, there's a manufacturing plant. We can copy that shots. Okay, look here, there's addition. This is the wrong one. No, this is the wrong one. This is the actual figures. Okay, 67,500 was addition. Okay, addition. See, there's addition 67,500. Transferring cumulated depreciation was 6,000 minus. There's a revaluation gain, surplus was 18,500. Revalued amount was 80,000. And annual depreciation was 6,000. Transferring cumulated depreciation was 6,000 minus. Cumulated depreciation was 0. Final balance is 80,000. This is enough for manufacturing plant. At that time, we already calculated depreciation expense. Depreciation expense should be located in two locations. What are there? This manufacturing cost, manufacturing plant depreciation was related to manufacturing cost. No, therefore we transfer this manufacturing cost related depreciation to cost of sale and closing inventory. This is the answer of adjustment. This adjustment. Look here, what is the next adjustment? Next adjustment, we already calculated manufacturing plant. No? In next video, this is the depreciation was already done. There is a manufacturing plant, cumulated depreciation already be carried. And in next video we meet next bullet. This is the office equipment related adjustment. In next video we meet in this adjustment.